Coming up on show 539, it's the Tesla Q2 earnings call reaction, and the Germans fight back. Well, those stories and many more. We're talking the Mercedes EQC, the BMW iNEXT/iX5, and also new ways of smart charging. Good morning, good afternoon, and good evening. Wherever you are in the world, welcome to EV News Daily. Thursday, 25th of July edition today. My name is Martin Lee, and I go through every story to save you time. Here's what's happened in the last 24 hours. Well, thank you as always to myev.com. They do help me make this show. It is your EV marketplace for buying and selling and learning about EVs along the way as well. One of the things that I love about it as well is the very secure, direct way of messaging a fellow buyer or seller. Well, you wouldn't be a fellow buyer, would you? You would be the buyer if someone was selling. A great way to make contact with people in a safe, secure way as well on direct message. So the big news today is all about Tesla's Q2 earnings reaction. In terms of the UK time, it was pretty late at night here, just before midnight, when all the news came in about it and the earnings call. So I had to listen to that, and then I did the thing that I think is sometimes pretty sensible. I went to bed and I slept on it. And I woke up this morning, and then this podcast is being recorded with the benefit of a night's sleep. And, you know, that is a little bit of perspective on the whole situation, because immediately the websites which are either the ones that want to see EVs fail, you know, the ones that are funded by oil industry advertising, or the websites which are funded by clicks, you know, they need to get so many thousands of views on the article. The headlines last night and the headlines this morning, really from those mainstream websites, are all about Tesla missing expectations. And that's been the headline pretty much written in various different forms today. Whose expectations, though? Not yours, I imagine, certainly not mine, but Tesla missed the expectations of a random group of financial people whose job it is to make certain predictions. And you could even argue that they got their predictions wrong, but no, because the analysts want to see a certain number. When Tesla doesn't do that, any negative story that you see in the next 24 hours should be framed in that perspective. Just check it's not based on, if you see a story in the next 24 hours about Tesla so-called missing, air quotes, missing anything, remember, by all accounts, this has been a fantastic quarter for electric vehicles. Well, those on the call, by the way, so you get Martin Viecha, who is the Senior Director of Investor Relations there. You get Elon, obviously. You get, the co-founder and CEO. I had someone message me recently to go, you keep saying he's co-founder. You know, he wasn't. He joined after the company had started. Yes, I do say that because technically he is a co-founder of Tesla. No, he wasn't there on day one, but by being the lead investor and putting the money in after a few months, it did confer him co-founder status. Also on the Tesla website as well, when you read his bio, his profile on the official Tesla site, he is officially listed as a co-founder of Tesla. That was a digression, sorry. JB Straubel, who is the CTO, well, former CTO, I'll come on to that. Zachary Kirkhorn, Jerome Guillen, the president of automotive, Drew Baglino, who is the VP of technology and who, by all accounts, is the new CTO. Big statement from Tesla was that the production rate of the Model 3 continued to improve through the quarter, breaking a monthly record back in May and then again in June. All manufacturing equipment in Fremont now has demonstrated the capability of 7,000 Model 3s a week, and they work to increase that. But that doesn't say they're making 7,000 a week. If you read between the lines or just read the actual words, it says the equipment they have shows they could make 7,000 a week. Not that they are. They aim to produce 10,000 total vehicles of all models by the end of 2019. I'm not sure if that means in Fremont or worldwide, because by the end of this year, Giga Factory 3, Shanghai, will be up and operational. So it's just a point of clarification, really. The Model S and the Model X production continues to run a single shift schedule, and they made over 14,500 of those vehicles combined in Q2. They say that deliveries increased sequentially to 17,722 as they prioritized inventory reduction. In other words, they didn't make as many cars as they sold because they had some sitting around. Maybe sitting around isn't the best way to describe it, but as a result, new car inventory levels have fallen to just 18 days of sale. That includes vehicles in transit, on ships, company-owned vehicles. The industry average, by the way, the US industry average is around 70 days of sales in terms of inventory. Tesla sitting at just 18, yes, 18. Well, preparations for the Model Y production in Fremont began back in Q2. Due to a significant overlap of components between the 3 and the Y, they can leverage existing manufacturing designs. Additionally, making progress managing the Model Y costs with a minimal cost premium expected over the Model 3. Due to the large market size for SUVs, as well as higher average selling prices, Tesla thinks the Model 3 will be more profitable than the Model Y will be more profitable than the Model 3. As a result of the growth and operational improvements, Tesla say they have generated $614 million of free cash flow. That's operating cash flow less CapEx, capital expenditure, in Q2. $614 million. Combined with the public offering of equity and convertible bonds, which netted $2.4 billion US, they ended the quarter with $5 billion of cash and cash equivalents. That is the highest level ever in Tesla history. And yet, I'm sure somebody today will utter the words Tesla and bankrupt. They have $5 billion of cash and cash equivalents to hand, the highest ever in their history. They are perfectly positioned now for development and production of the Model Y. Add in the Semi, add in the truck, add in Giga Factory 3, add in Giga Factory Europe. We'll come on to that. Yes, these are all expensive projects to do. Yes, they have plenty of money to do those things with. I mentioned JB, by the way. JB Straubel was at Tesla even before Elon Musk. In a summary from ElecDrive, in his position as senior advisor going forward, JB Straubel says he's going to continue to work on some of Tesla's current projects, in particular new technologies and innovations. While Elon was the investor and innovative businessman behind Tesla, JB Straubel was regarded as the tech leader, the battery tech leader. To this day, Tesla is reliant on those round laptop-style cells, the 18650s and the 2170s, instead of typically automakers using pouch cells or prismatics. Elon Musk said that if he hadn't had lunch with JB Straubel in 2003, the company would basically not exist. So JB, not so much stepping down, but stepping away from operations. And after all these years and directing Tesla in an amazing direction, who can blame him? And I'm sure that everyone who has driven a Tesla, everyone who's ever worked for the company or aims to own one day would thank him for his service and incredible advancement of electric car technology. There is no doubt in my mind, by the way, that if it wasn't for JB Straubel and the work he did at Tesla showing the world and other automakers how to make brilliant electric vehicles that are fast and fun and can turn a profit, then they wouldn't be making them. They should be making all the petrol and diesel cars they could possibly make with their nice big fat margins. So thank you for everything, JB. In terms of cash, that $614 million of free cash flow in Q2 does mean they end up with $5 billion US dollars in cash and cash equivalents, which they're already plowing into many of those big projects. But one of the big things they talked about was mobile service and the need to get service right. 25 new service center locations, 101 new vehicles for mobile service. One of the things they're spending some of that $5 billion on. Right, let's get on to what Elon said. Normally I play you Elon clips, but I'm just going to... There's a lot in here, but also, you know what? It's all online. If you want to go through what Elon said in really dissect it, my favourite weekly Tesla podcast is Ryan McCaffrey's Ride the Lightning. I'm sure Ryan is going to pull out the Elon clips and play you little selected bits. He always does, and so I recommend that. But let me tell you what Elon said. Last quarter, we delivered more than 95,000 vehicles, a record for Tesla. And to put that in perspective, an 80% increase in deliveries compared to the second quarter of last year. It's hard for people to appreciate when you have a large manufactured item with a complex double supply chain just how difficult that is. I'm incredibly proud of the Tesla team for being able to do that, says Elon. Model 3 was once again the best-selling premium vehicle in the US, outselling all of its gas-powered equivalents. Now, Elon said the word combined. There is an article today on Inside EVs that have gone through that, done a bit of a fact check, and they think it hasn't quite done it. They think that the Inside EVs sales numbers, if you add up all of the other competitors to Model 3 combined, Model 3 isn't ahead, not far behind. not picking hairs here, we're just fact-checking stuff. So that was the word that he used there. In Europe, though, Model 3 is approaching sales levels of its established premium competitors, and it was awarded a 5-star Euro NCAP safety rating. That's in addition to Model 3 getting a 5-star rating in the US from NHTSA, and 5 stars in every category and subcategory as well. The safest car they ever tested. Elon was really proud of Motor Trend. Also recently selected Model S as the best vehicle they've ever tested in its 70-year history. Across all cars they've ever tested, Motor Trend, arguably the leading authority in evaluating vehicles, said Elon Musk. The Car of the Year is the most coveted award. So it's incredible that they would say the Model S in their entire 70-year history is the best vehicle ever evaluated. We've also issued numerous software updates and improvements to have the Model S and the Model X become faster, safer, and added dozens of new features, says Elon. Just like the Model 3, the S and the X have the hardware needed for a future of full self-driving capabilities. As we look ahead to the rest of the year and into 2020, Elon says that they are focused on launching new vehicles and energy programs, further expanding manufacturing operations, and continuing to improve customer service. So we remain focused, says Elon, on international expansion because local production is essential to being cost competitive. By the end of this year, we will, and then he corrected himself, we expect, not we will, we expect to be producing Model 3s in volume out of Giga Shanghai. And as you can see from the photos they put online yesterday in the quarterly letter, they're installing equipment already. It's progressing well. It looks like an up-and-running working factory within a couple of months of the whole thing being built. We also have to finalise a location for European Giga by the end of the year, he said. Well, moving on to Fremont, preparations of the Model Y have begun. It has a high development and component overlap with Model 3, so it should be easier to ramp. Let's face it, nothing could be harder to ramp than the Model 3 and the hell that they went through. 3/4 of components, remember, are identical. We expect the manufacturing costs for Model Y, despite additional content, to be the same as Model 3, he says. Well, this quarter, we opened 25 new service locations and added more than 100 mobile service vehicles to the fleet. And although our the fleet size has doubled in the last 12 months, they are adding to service as well. Now, that's an incredible stat. It's just one of those things that you hear and you brush over. The Tesla fleet size has doubled in the last 12 months. Yeah, the Tesla fleet of cars on the road in the world has doubled in the last 12 months. Nonetheless, massive improvements have been made, says Elon, in service and parts waiting time and collision repair. They are insourcing collision repair activities, and it had a good effect on customer happiness. It's a very important milestone, and I think we believe Tesla has and is now at the point of being self-funding, and we expect to be free cash flow positive in future quarters, with the exception of being around car launches and new product ramps. And again, it's something that I think people heard and brushed over, but I just think that's such an important phrase that Elon used. They are now at the point of being self-funding. In terms of deliveries, the guidance is this. We expect to deliver between 360,000 and 400,000 cars this year. We expect production to be at a slightly higher number than that, and demand to be at a slightly higher number than that. So people often confuse deliveries, production, and orders. They are 3 separate numbers, Elon said. And so that is really the gist of his intro speech. Let me talk more about service, because I know many people who listen to this podcast who own Teslas have had varying levels of service over the years. Jerome Guillen, who is president of Automotive, said this: yes, as you pointed out, the best service is no service. AKA cars, being so reliable they don't need a service. Back to the quote. So we're trying to continue improving the quality of the cars, and we track this daily. Fewer and fewer service visits are required from the most recent cars that we're building, so we're on a good trend there. We also need a lot fewer work to finish the cars in the factory. Besides that, we're making more parts for service centres, and we ship everything same day so that people don't have to wait for parts. We accelerate service, we increase capacity. There's a lot of improvements that we already implemented, says Jerome, and many more on the way. I'm optimistic and happy with the service team. And they talked at length, by the way, towards the end of the call in response to one of the questions about the most common parts that are needed in the service centres being on the shelf. And actually, that being a positive, so when you're a small niche electric car maker, you can have all of the parts that you need in one factory or in one location, in one storage facility. And then as you grow, that no longer makes sense. And so when you're small, it makes sense to have them all in one place. Someone comes in, they need a new widget, a new button, a new screen. You put a call into that central storage facility, and it gets shipped out to the service center. As you grow, they said they've had to rethink the way they work as a company. Now it makes more sense not to keep on paying for bigger and bigger and bigger central storage, but actually to have all the parts, the most common parts, at every service center. And so by doing that, they literally have them on the shelf. They literally want them physically on the shelf. Talking about Shanghai and the Giga Factory, that continues to take shape. In Q2, they moved machinery into the facility and they're working on the first phase of production already. It's going to be a simplified, cost-effective version of the Model 3 line with a capacity of 150,000 units every year, the second generation of the Model 3 production process. So Tesla are not only getting better at making cars, they're actually getting better at making cars. Just like in the US, the Model 3 will have a base price consistent with its gas-powered competitors, even before savings and incentives, given Chinese customers bought well over 500,000 mid-sized premium sedans, I would call them saloons, in the last year. This market poses a strong long-term opportunity for Tesla, they say. We're looking forward to starting production in China by the end of the year. Depending on the timing of Gigafactory Shanghai's ramp, we continue to target production of 500,000 vehicles globally in the 12-month period ending June 2020. And finally, there's so much more, and finally the most important thing is Battery Day. This is something that many people are looking forward to because it's when Elon will get on stage, you imagine, and probably Drew, now that maybe JB will come back and say a few words, but, JB's replacement, Drew, who we saw, by the way, another quick digression. We saw him at a recent event, and there were a few people online that said, and I was one of those, by the way, that echoed those. I didn't come up with it, but I echoed the sentiment that actually, when you bring out somebody on stage alongside JB, what is that saying? These things never happen by accident. These are never just like, hey, Drew, you jump on stage. Like, these things are so carefully choreographed and rehearsed. And I was shot down for that, by the way, in the comments of people saying, no. That was just like Elon saying, hey, Drew, jump on stage. I think this is proof, really, that was part of a choreographed handover of increasing his profile as JB is stepping down or stepping into a consultancy role. As for Battery Day, they say we're going to do a comprehensive review of cell chemistry, module and pack, architecture and a manufacturing plan that has a clear roadmap to a terawatt hour per year. What? The time for this is about 6 months. So it's not going to happen this year, which was the expectation. Maybe February, maybe March next year, they're going to do a complete show and tell on battery technology. Of course, they've bought another company called Maxwell that are working on some very clever battery technology. So that'll all be folded well into Tesla by then. We're looking forward to that. That's my roundup of what I thought was important from yesterday, having, like I say, another 12 hours of opportunity to reflect on what was important, but also not get carried away with the fact that, yes, they did lose some money this quarter. No, they weren't profitable. But does any of that matter? When you can see where they're going, you can see the trend line, you can see the path to profitability. I'm not getting hung up on it. I want them to make great cars and to push, as well as to make great cars. I'm not sure I'll ever own a Tesla, but, I'd love to, obviously, but they will force the rest of the world's car makers into making EVs because they'll make such great cars that everybody will compare. Look, it happens now. Anybody that makes an EV gets compared to a Tesla. Final story on them, by the way, this is separate from Inside EVs. Audi is still parking its e-trons outside Tesla locations. I told you about this on the podcast recently, how they're turning up at superchargers with the Audi e-tron, the marketing team from Audi with the e-tron at sometimes even blocking supercharger stations. Jesus. And I should say jeepers. This is such a crazy idea the more I think about it. Now, Audi have turned up with their marketing banners and tent outside a Tesla store in Germany, says Inside EVs. Correct us if you think we're wrong. We feel like this is counterproductive for the automaker. They are inadvertently promoting Tesla. Yes, I sort of agree with Inside EVs. They are inadvertently promoting Tesla. They're also making themselves look really stupid. Audi is a much bigger VW is a much bigger company. And that's like the first rules of engagement. When you are, when you're number one, when you're one of the big boys, you don't need to behave in the way that these scrappy up-and-coming companies behave. Tesla has to do things a certain way because they have to do things a certain way. When you're Audi and you've got your first EV, the e-tron's a great car as well. No, the range isn't great. No, the efficiency isn't great. Don't need to remind me of that in the comments. But it is largely a wonderfully put together car. And, it would look fantastic on my driveway, I'm just saying. But you just don't need to go and sit outside a Tesla store in Germany to promote it. If I had anything to do with overseeing the marketing teams at Audi, somebody would be getting a phone call pretty sharpish and saying, no. Highlight the benefits. Don't highlight the negatives. Right, moving on. Let's talk GM and GM's self-driving unit, Cruise. Where are they on launching self-driving cars by the end of the year, which was indeed the target? They've issued an update on its progress as they look to achieve large-scale deployment in San Francisco, including a scaled build-out of EV infrastructure, says Phil over at Electrek today. Well, Cruise, the self-driving unit by GM, their investment in EV infrastructure will include what they call the largest EV fast charger in the country. And as far as I'm aware, that is the largest one is probably a Tesla supercharging station. And so they're talking about building bigger than Tesla build. According to the CEO, Dan Aman, it said in a Medium post, there weren't any further details about how specific that plan was, but I imagine they'd have to go bigger than Kettleman City if they want to be bigger than Tesla. GM's Cruise has the world's largest fleet of all EV self-driving cars. They use the Bolt EV, and Aman says Cruise owns 40% of the EV fast chargers in San Francisco, where their headquarters. That plan, though, to make a self-driving fleet of cars by the end of the year is being pushed back to a point in the future. Let's talk about HUBJECT, a company that I've talked about on the podcast before, and indeed even interviewed someone from HUBJECT before. HUBJECT is the leader, they say, in simplifying EV charging with e-roaming and innovative infrastructure technology. They're partnering with IOTECHA. Now, they're a company that specialise in making hardware and software solutions around EV charging infrastructure. So what they're going to do together, they're going to simplify the implementation of what is otherwise known as plug and charge, the smart charging system that uses ISO 15118. Yeah, let's just call it plug and charge. Smart charging technology enabled by plug and charge can work with, any smart tech that you need. City planners, fleet operators, property owners, local government even, to predict and manage the amount of energy that goes into an EV when it's charging. Energy management can alleviate strain on the grid using smart charging. Reduces the need to make more infrastructure. You can evaluate how you balance that load when you charge, how much you charge, based on how much EV drivers are willing to pay as well. And so two more companies getting their heads together to make smart charging better. Now, I mentioned at the start of the show, the Germans are fighting back. BMW is doubling its battery production capacity at its Spartanburg plant in South Carolina. I hope that's how I say Spartanburg. For the upcoming plug-in hybrids that BMW make, the investment amounts to about $10 million. According to ElecDrive, the high-voltage batteries are used in plug-in hybrids of the X3 and the X5, which are also built in that location in South Carolina. The X5 xDrive 45E is going to start its production in a few weeks, actually. And by the end of the year, 120 employees are going to be working in the enlarged battery production facility for BMW. But they got more on the way, though. BMW is calling its future electric mid-size SUV. You could call this a Model Y competitor. They're calling it the INEXT. But we've also heard it would be called the iX5, and that makes sense because they're going to have the iX3 So what about the iX5? Would you call the iX5 more of a Model X competitor? Well, it makes perfect sense to rename the INEXT to the iX5. We'll stick with the official name for now, though, and photographers for Motor1.com and Inside EVs have managed to get a few snaps. Photographers managed to compare the INEXT to what was actually a fossil X5 on the back of a car carrier. Now, the electric version, in its camo gear and its camouflage coating, looks longer, looks lower, actually, and it's a longer wheelbase. It could mean there's a roomier interior for the electric SUV. Now, that's also going to be built at the plant I was talking about a moment ago in South Carolina. And speaking of that plant, the INEXT will probably be made there in the US, actually. Not only because the US is a major EV market, because the new SUV will sit on the new platform that they're making there. It's conceived to be flexible in terms of the platform that it's going to be on, because I told you about this on the podcast recently, that the BMW philosophy is for one platform to be able to take a fossil, a hybrid, a pure electric powertrain, and to all be made in the same factory, and to swap them out as and when they need to, even make them all at the same time even. Well, Mercedes are following the same philosophy in their factories. They are indeed planning a range-topping EV as well that will probably go by the name EQS. Now, we've seen the EQC. I've not seen any on the roads, don't know if any are being sold yet, but the EQS will be launched by early next year, according to Adrian Padenau from Motor1.com, and this has also been spotted up close and personal by more spy photographers. Very heavy camouflage, though, on this, but despite all the camouflage, you can't get away from the overall shape of this. It's a dramatic shape, actually. It's pretty obvious. We're dealing with something quite special, though, a low roofline. It has a swoopy shape. This isn't your typical Mercedes saloon or sedan. It looks even sleeker, even more sleeker than like a CLS or an AMG, like a GT four-door coupe. The door handles, well, there aren't any, because they're going to stick out from the body as you walk up to it, because the EQS is going to get those pop-out door handles like the next generation S-Class. The rear fenders, by the way, in these spy shots, both have fuel caps. That would indicate that either the car in the photo is a plug-in hybrid, or they're just there to try and throw people off the scent. The Mercedes EQS, we'll call it the EQS, it might change its name, is expected to ride on its own EV platform, though, known as the MEA, the Modular Electric Architecture Platform, whereas other cars from Mercedes sit on a shared platform. So this one is going to be on an aluminium-intensive platform with the hardware to accommodate flat floor, so never designed for fossil cars, but that skateboard design. Power on the EQS coming from dual motors, one at the front, one at the rear, all-wheel drive. I mean, the EQC is going to come with 402 horsepower, so this is definitely going to come with more, and this is my cup of tea. I know that everyone loves an SUV, but look, we haven't got kids yet, and so we don't need that big mummy wagon to take the kids 5 minutes down the road to school that all people seem to do these days with their big SUVs. So for me, I've got no interest in an SUV. I like the fact that you sit higher and you can see the traffic for safety, but apart from that, goodness me, most people who buy an SUV should also think, would a saloon or a sedan suit me more? This is hatchback style, by the way, this EQS picture, or you would call it like a fastback. So it's five door. I just think the shape looks gorgeous. I really hope Mercedes can unveil more details very soon of this car, because this is a nice executive saloon sedan, pure electric. It's going to get inevitable, called the EQS, it's going to get inevitable comparisons with the Model S from Tesla. Wow. If you look at the current top-of-the-line Mercedes saloon sedans they are making, the interiors of those are next level gorgeous. I love their styling at Mercedes-Benz. And if they don't go crazy, and I don't think they will, I think these legacy German OEMs are largely going down the route now of making their cars very conventional and attracting fossil buyers because they look like the petrol versions of the car, the inside, the screens, everything looks very similar, very conventional, just happen to be electric. If Mercedes do that, they could have a big hit on their hands here with people who wouldn't otherwise have gone for an EV. Otherwise, they'd be driving a Model S from Tesla already. That's your news today. It was a biggie. Thank you for bearing with me. Hope you enjoyed it. I loved it. There's so much good news around EVs at the moment. It's like I got more. I could carry on. You don't want to hear more of my voice. I got more pages that I could read, but I'll save that for another time. I maybe I should do 2 podcasts a day. Let's get on to question of the week. Thanks to myev.com for setting this. Keep your comments coming in on email and YouTube. What's the most constructive way of stopping a charging space being iced? What is the most constructive way of stopping fossil cars parking in EV chargers? Let's be positive and constructive on this and find a way. Email me hello@evnewsdaily or drop me a message on Facebook and YouTube. Thank you to 236 patrons of the podcast who fund this show. There is a website called patreon.com. You can go to patreon.com/evnewsdaily and find all the shows in there, but also find out how you too can, if you want to, have a think about supporting this show, like $5 a month, like $10 a month, whatever. It's not essential. I'll do it anyway. Hello to Phil Roberts from Electric Future, our premium partner. Hello to Brad Crosby and the gang at Avid Technology. Thank you so much for your support. If you want to get any of the previous 538 shows online, you can do for free. The new ones you get first and free and automatically. Hit subscribe in your podcast app, whatever app you use. And if you follow me on Twitter @EVNewsDaily, I'm running a poll at the moment about what you want to see in the show notes, because I've been told I have to make the show notes smaller. They're getting a little bit too long. So let me know your feedback. Right, come and say hi on the socials by searching EV News Daily. Have a wonderful day. I'll catch you tomorrow. And remember, there is no such thing as a self-charging hybrid.